Welcome to The Explainer. Today, we are diving deep into something that's a really big deal, especially for all of you gearing up for your banking and civil service exams. We're talking about the RBI's new comprehensive rules on settling claims for customers who have passed away. This is a must-know topic, so let's get right into it. So, the big question is, what actually happens to all that money in a bank account or the valuables in a locker when someone passes away? It's a tough situation, right? Well, the RBI's latest circular is all about making this process smoother. It sets up a clear, standard way for all banks to handle these claims, which is a huge relief for families during a difficult time. All right, so here's our game plan. We'll start with the new rules, then jump into how claims are settled for both deposit accounts and lockers. After that, I'll get into the timelines and penalties, super important for your exams. And we'll finish with a quick summary of everything you need to remember. Let's go. First up, RBI's new claim rules. We're going to build the foundation here. Make sure you really get these definitions because, honestly, they're the key to understanding everything else we're about to talk about. Okay, first things first, let's talk about something called a survivorship clause. You've probably seen this on a joint bank account, right? It's that little phrase, either or survivor. And let me tell you, this little clause is a total game changer. It basically means that if one account holder passes away, the money automatically goes to the other person on the account. It just makes the whole process so much simpler. Next up, we have officially valid document, or as you'll see it, OVD. This is pretty straightforward. It's just the official term for the government-issued ID that the bank needs to see. We're talking about things like your passport, your driving license, your ODR, you know the drill. Anyone making a claim, a nominee, a survivor, they'll need one of these. Okay, pen and paper time, because this next one is huge for your exams. It's called the threshold limit. Think of it like a dividing line. It's a specific amount of money, and whether the claim is above or below this line completely changes how complicated the process is. This is especially true when there's no nominee named on the account. And here are the numbers you absolutely have to memorize. See this chart? For cooperative banks, that threshold limit we just talked about is set at 5 lakh rupees. But for all the other commercial banks, it's way higher, 15 lakh rupees. I can almost guarantee you'll see these numbers in a multiple choice question, so lock them in. All right, let's move on to the actual process of settling claims on deposit accounts. Now, what's interesting here is that the whole procedure splits into 2 totally different roads, and which road you go down all depends on one single thing. And here it is, the big fork in the road. On one side, you've got a claim with a nomination or a survivorship clause. That's the easy street, the fast lane. It's straightforward. On the other side, no nomination. And that, my friends, is where things can get a lot more detailed and, frankly, a bit more of a headache. So if you're on that easy path, the one with a nomination, it's incredibly simple. It's just 3 steps. You submit the claim form, provide a copy of the death certificate, and show your ID, your OVD. That's it. And here's a super important point for your exams. In this scenario, the bank is not allowed to ask for any complicated legal stuff like a succession certificate. Doesn't matter how much money is in the account. That's a huge deal. Now, what if there's no nomination? Well, this is where it gets a bit more involved. The bank needs proof of who the rightful legal heirs are. If the claim amount is below that threshold limit, something like a legal heir certificate might be enough. But if the claim is above the threshold, then you're looking at more serious legal paperwork like a succession certificate. There's also a provision for the very sad situation where a person is missing. For smaller claims, instead of a death certificate, the family can use an FIR and a report saying the person can't be found. Okay, so that's deposit accounts. What about safe deposit lockers and other things left in the bank's safe custody? Well, the good news is the rules are pretty much the same. There's just one crucial extra step, and it's there to make sure everything is handled properly and transparently. And here's that key difference. The inventory. It's a non-negotiable step. Before the bank hands over anything from the locker, they have to make a detailed list of every single item inside. And this isn't done behind closed doors. It has to happen right there in front of the claimants, plus 2 independent witnesses. This creates a clear official record so there are no questions later. All right, everybody, lean in a little closer for this next part, because for your exams, this section is absolute gold. We're about to get into the hard numbers, the deadlines, the timelines, and the penalties for when banks don't stick to the rules. This is where the real marks are.
First number to burn into your brain, 15. That's it. Banks have exactly 15 calendar days to get a deposit claim settled once they've received all the necessary documents. And notice I said calendar days, not business days. Weekends count. The clock is ticking from day one. No exceptions.
So, what happens if the bank messes up and misses that 15-day deadline? Well, it's not just a polite apology. They have to pay up. The penalty is interest on the claim amount, calculated at the current bank rate, plus an extra 4% per year. This isn't just a slap on the wrist. It's a serious financial penalty designed to make sure banks don't drag their feet. You think that's tough? For lockers, the penalty is even stricter. We're not talking about interest rates or percentages anymore. No, this is a flat-out fine of 5,000 rupees per day for every single day of delay in giving access to that locker. I mean, can you imagine how quickly that would add up? It just goes to show how seriously the RBI is taking this issue. Okay, we have gone through a lot of information. So let's pull it all together and create a super focused summary of the absolute must-know points for your exam. If there's one slide you're going to take a screenshot of, it's this one. Get ready. All right, let's do a quick fire round of the key takeaways. Threshold limits: 15 lakh for commercial banks, 5 lakh for co-ops. Got it? Timelines? Easy. 15 calendar days for both deposits and lockers. Penalties? For deposits, it's the bank rate plus 4%. For lockers, it's that hefty 5,000 rupees per day. What's the biggest lesson here? Nomination is your best friend. It simplifies everything. And don't forget that special rule for missing persons. Claims under one lock can be processed with an FIR. Boom! That's the core of it. And that's a wrap on our breakdown of these new RBI rules. You know, these regulations are a really positive change, making things clearer and hopefully a little less painful for families. But beyond just being exam material, they really drive home how important it is to have your own financial affairs in order. So here's a final thought to leave you with. As you're memorizing these rules for your exams, maybe take a moment to check on your own bank nominations. It's a small step that can make a world of difference.